The United States has accused China of economic foul play, alleging manipulation of money markets. This has sent shockwaves through global markets, raising fears of a new economic conflict. The US claims China inflates and deflates its currency, the yuan, for trade advantage. This is another chapter in the ongoing US-China economic rivalry. The trade war, marked by tariffs and accusations, has lasted several years. The US argues China's actions harm American businesses and workers. Beijing denies the accusations, insisting its practices follow international norms. This is not the first time the US has pointed fingers at China for currency manipulation. Similar accusations have been made under previous administrations, often followed by rounds of negotiations, temporary truces, and renewed tensions. The issue has been a persistent thorn in the side of US-China relations, fueling distrust and hindering cooperation on other global challenges. In the past, the US has labeled China a currency manipulator, a designation with potentially significant economic consequences. This designation allows the US to impose tariffs on Chinese goods and could lead to further sanctions. However, proving currency manipulation is a complex task, and China has consistently denied the accusations, maintaining that its exchange rate policies are designed to ensure economic stability, not to gain an unfair trade advantage. The back-and-forth accusations have done little to resolve the underlying economic tensions between the two nations. Instead, they have contributed to an atmosphere of animosity and distrust, making it more difficult to find common ground on trade and other economic issues. The current situation, with its renewed accusations, raises concerns that the cycle of conflict will continue, further damaging the global economic outlook. Currency manipulation, in its simplest terms, involves a country artificially influencing the value of its currency in relation to other currencies. This can be achieved through various means, such as buying or selling large amounts of foreign currency, setting fixed exchange rates, or imposing restrictions on currency trading. The goal of such interventions is often to make a country's exports more competitive or to protect its domestic industries from foreign competition. While some level of currency intervention is common practice for central banks around the world, accusations of manipulation arise when a country is seen as deliberately and persistently intervening in currency markets to gain an unfair trade advantage. The economic impacts of currency manipulation can be significant, influencing trade balances, capital flows, and overall economic growth. For the country accused of manipulation, the economic benefits can be tempting. A weaker currency can make exports cheaper, boosting demand for its goods in foreign markets. This can lead to increased production, job creation, and overall economic growth. However, such actions can also trigger retaliatory measures from trading partners, leading to trade wars and global economic instability. Section 4, DeepSeek, a catalyst for anxiety. DeepSeek, a Chinese AI firm, has made significant strides in AI development, causing ripples in the tech world. Its breakthrough AI model R1 outperforms established players, sparking mixed reactions in the US. The US sees DeepSeek's success as a threat and a sign of China's growing technological prowess. China's investment in AI is seen as a key driver of future economic growth. The US is wary of China's technological ambitions, viewing DeepSeek's achievements as a challenge. DeepSeek's development has fueled US anxieties about China's potential economic leverage. Section 5. The future of US-China economic relations. The recent accusations of currency manipulation, coupled with the emergence of DeepSeek and the ongoing trade war, paint a bleak picture for the future of US-China economic relations. The two countries, once seen as engines of global economic growth, now appear locked in a cycle of distrust and competition, with potentially far-reaching consequences for the global economy. The path forward is fraught with challenges. Resolving the underlying economic tensions will require both sides to engage in good faith negotiations and to address each other's concerns. However, the current political climate, marked by mistrust and a lack of communication, makes such cooperation difficult. The stakes are high. A continued deterioration in US-China economic relations could lead to a full-blown trade war, with devastating consequences for both countries and the global economy as a whole. Conversely, finding common ground and establishing a more cooperative economic relationship could unlock significant potential for growth and prosperity. The future of the global economy may very well depend on which path these two economic giants choose to take.